Welcome back. Today on the Byte-Size Brief, we're going deep on Intel. You know, for decades, this company was the undisputed king of silicon. But right now, depending on who you ask, Intel is either gearing up for one of the biggest comebacks in tech history, or it's a giant that's just struggling to keep up. We're going to dig into both sides of that story. So that's the big question, right? Is Intel a turnaround titan in the making? A stock that could create incredible wealth for investors who get in now? Or is it a classic value trap, a famous name that looks cheap, but is actually just burning through cash while smaller, faster rivals eat its lunch? That's what we're here to figure out. So here's our game plan. We'll start with where Intel stands today, right at this massive crossroads. Then we'll get into the huge company-defining bet it's making on its future. After that, we'll break down the bull case, why people are so excited, and then flip it to the bear case, why so many are skeptical. And we'll wrap up with the key dates in 2026 that are going to tell us who's right. You know, when you see a stock like Intel swinging all over the place, it's not just random noise. What's happening is the market is trying to figure out how to value two completely different companies that just happen to share the same name. You've got the old, profitable Intel we all know, and this new, ambitious, cash-burning Intel it's trying to become. And listen, this isn't just some debate for stuffy Wall Street analysts. This comment right here, from a regular investor, nails it perfectly. Intel is caught in a huge narrative battle, and everyone, from hedge funds to retail traders, is trying to figure out which story is the real one. So at the very center of this whole battle is this massive strategy shift called IDM 2.0. And let's be crystal clear about this. It is one of the biggest, riskiest, and most expensive bets in the entire tech industry today. They are truly betting the company on this.
To really get what's going on, you have to understand what a foundry is. Let's use an analogy. For decades, think of Intel as a world-class Michelin star restaurant. They designed their own amazing recipes, their famous CPUs, and they cooked everything themselves in their own exclusive kitchen. But now they're spending billions to build this giant state-of-the-art commercial kitchen, not just for themselves, but to cook for other companies, including some of their biggest rivals.
And this slide, wow, it just lays bare the brutal financial reality of that strategy. You've got the old restaurant, Intel products still making a very healthy, almost $13 billion profit. But then you look at Intel Foundry, that new kitchen they're building, and it's losing over $10 billion. The old business is literally bankrolling the new one. Let's just pause on that number for a second. Over $10 billion lost in 1 year from just the foundry business. That gives you an idea of the sheer scale of this investment. It shows you just how deep of a hole this new business has to dig itself out of just to break even, let alone become a success. So you see a number like that, and you have to ask, why on earth would anyone be bullish on this? Well, the bull case says you're looking at it all wrong. That isn't a loss, it's an investment. They believe Intel is pouring concrete for a foundation that will support a whole new era of growth. And it's not just blind hope. Some folks on Wall Street are buying into this story. KeyBank, for instance, slapped a $70 price target on the stock. Why? Because they're seeing early signs of life. Things like improving manufacturing yields, which is just a fancy way of saying they're getting more good chips out of each batch. They see that as proof this whole thing is actually starting to work. The bull argument really stands on 4 strong legs. First, a real technology leap with their 18A process. That's their ticket to get back to the cutting edge. Second, they got a huge vote of confidence from Elon Musk's companies for a new project called Terafab. Third, their existing data center and AI business is already a reliable growth engine. And finally, they are absolutely putting their money where their mouth is, with massive deals like the $14 billion investment in Ireland.
But the real dream for the bulls, the rumored holy grail, would be landing Apple as a customer. I mean, can you imagine? If Intel starts making the chips that power future MacBooks, that would be the ultimate proof that their tech is back. It would completely change the narrative overnight.
Okay, but for every one of those exciting bull arguments, there's a pretty scary counterpoint. The bear case is all about the staggering cost and the brutal difficulty of what Intel's trying to do. They see it not just as a costly bet, but a potentially disastrous one. So on the other side of that Wall Street debate, you've got firms like Citi. They're telling their clients to sell. Their argument is pretty simple. They think the stock price already assumes a perfect, flawless turnaround, an outcome that they believe has an, quote, minimal chance of materializing. Ouch. And this is the slide that keeps the bears up at night. You put Intel next to its main rivals, and it just doesn't look good. Its valuation is more than double that of AMD, which is growing faster. While the foundry leader TSMC is printing money, Intel is burning it. And all the while, it's losing market share in its core business. From a bear's perspective, they're fighting a three-front war, and they're not winning on any of them. So the bear case really boils down to 4 huge concerns. 1. Execution risk. Can they actually pull this off without major delays? 2. Just the sheer financial pressure of burning billions of dollars every single quarter. 3. The competition is absolutely relentless. And 4. There's major geopolitical risk, since a huge chunk of their sales are tied to China.
So this all brings us to the proving ground. It doesn't matter if you're a bull or a bear, everyone agrees on this one thing. The time for talk is over. The year 2026 is when the rubber has to meet the road. Intel has to deliver, and believe me, that clock is ticking loudly.
So if you're watching this story unfold, here are the dates to put on your calendar. Q1 earnings, that's April 23rd. That will tell us if the cash burn is getting any better. By the middle of the year, we need to see hard data on their manufacturing yields. But the real deadline for a lot of people is Q3. If we haven't heard about any big, new foundry customers by then, that's a huge red flag. And by the end of the year, we'll know for sure if their tech can really compete.
And that takes us all the way back to our kitchen analogy. Intel is spending an absolutely mind-boggling amount of money to build the biggest, most advanced kitchen in the world. The ultimate question remains. In a world with more chefs and more demanding customers than ever before, can this incredibly expensive new kitchen actually serve up the future? The answer to that is going to define not just Intel, but maybe the entire tech landscape for years to come.